Hello, everyone. So thanks for joining us today. We really do have a distinguished panel today. I'm excited to be with them. Some of them I know for many years, and someone I just met a few minutes ago. And interesting background. So for starters, I'd like everyone to just introduce themselves. Just for a few minutes, tell us a little about your company, and then we'll get right into the questions on the topic of empowering self-directed financial services, tools, and resources. Thank you.
Hey y'all, Rishi Khanna here, CEO of StockTwits. StockTwits is one of the original social platforms for retail investors and traders. So founded about 15 years ago, and have a large multi-million global user base where retail investors and traders come, connect, share ideas, whether they're trading, long-term investing, and we've expanded since then. We have data products and tools, as well as trading on the platform, and excited to be here.
Good afternoon, everybody. My name is Lule Demese. I'm the U.S. CEO of a company called eToro, which is a social investing platform. We have about 32 million users globally. We're in about 100 countries. And our ethos is really serving the retail investor, and we have innovations like copy trading, where you can actually copy other investors, you can track other investors, and our commitment is to make sure that the retail investor voice and part in the marketplace stays as thriving as it was in the last few years.
Good afternoon, everyone. This is Abdul Zoya Biar, coming from Upleg and sensamarket.com. Again, we are a startup for the last 3 years, coming and getting into the trading technology firm. So we are partnered with Tradia Brokerage, Trade Stations. We use the APS, Benzinga, TradingView, and stuff, and we kind of customize the platform to various different clients out there. We are primarily focused on influencers. It could be like 100,000 users to like 1 million users, followers. They don't want to leave the platform, but they want to still leverage the brokerage companies of any of their APIs, but still want to customize depending on what their need is and bring in their educational content and stuff. So we are a product company, kind of like customize those solutions, niche solutions, educate you, community-based things, and that's what Upleg is all about.
Steve Sanders, Interactive Brokers. I am the EVP of Marketing and Product Development. I've been with Interactive Brokers for almost 23 years. When I got there were less than 10,000 accounts and a very large options market-making firm. And through the years, we dropped our options market-making business, and we were about to hit 2.5 million accounts all around the world. So it's been an exciting ride.
All right, let's jump right into the questions. Over the past few years, behaviors have changed, especially on the self-directed side. Tell us a little about your experience on how it has changed during the pandemic and shortly thereafter, if it's officially over. And tell us what you see for your users. Let's start with Rishi at the end, if that's okay. Go.
Yeah. So obviously the last 4 years have been a roller coaster ride, I think, to say the least. I think our perspective, right, we saw the rise of the interest from retail due to COVID, and so 2020, 2021 really saw this massive influx of users come into the markets because there was nothing else to do. And I think, that really began their learning journey and learning process, and whether it was for the right reasons or the wrong reasons where they start, I think that notion of starting in the markets is really important. And if you look at the stats, kind of generationally, from boomers to X to millennials to Z, each kind of cohort has gotten slower and slower into the markets, but is one of the still a few ways to generate wealth and, create wealth for yourself if you're a participant. And so I think COVID did, the service of, getting more and more young people into the markets and, that were not in there. And then, it is the learning. So while in 2021, when we had the GameStop craze and the, meme stock craze, from our perspective, obviously the level of conversation and connection in the community was through the roof. I mean, these guys remember that week we were just struggling to keep the servers up, right? And I think we 10x'd our infrastructure that week. But that community and the connections you make, and over time you learn about the asset classes or the companies and the stocks and the different things that you have the ability to invest in. people were exposed to that. And, our experience was they were connecting and they were, kind of sticking around. And then 2022 came around, right? In the spring of 22, and, obviously the tightening conditions in the markets, and, it was not all, up and to the right anymore. And, from our perspective, while many people maybe stepped away from being super active participants, they were participants now, right? And so they were still connecting, and how do we enable them to now better connect in this new landscape and better, learn and share ideas and, have access to the data and information and tools necessary to continue this journey of long-term wealth building, but in this very different world of 5% interest rates and so on and so forth. So for us, that journey, and we're still in that journey, right? At the end of 2023, it's still, these are pretty rough markets. But for us, we focus on how do we enable, empower, through learning and through mentorship and apprenticeship with a community that is of like-minded investors and traders, whatever your style is, whatever your risk profile is, because everyone's different. I'm sure most of us all have different, goals and strategies and whatnot amongst each other. So, we've really, just kind of been leaning in and focusing on that and building out the tools and the capabilities for the community to continue their, kind of education process and investing process along the way.
So just to build on what Rishi said, so I started out my career in traditional investing. So Interactive Broker, it was where I, not that particular company, but that particular realm was where I, cut my teeth, if you will, and learned my lessons of the markets. And I love history. And it occurred to me as we entered this space that one of the things that's really fascinating is why have we not seen the level of fleeing out of the marketplace this cycle that we did in '08? So in '08, what happened was at the peak, about 65% of households were investing in the marketplace. And then we scared the bejesus out of them. Frankly, we didn't have to. The world did, right? We thought the main artery of finance, which is banking, right? We thought it was ending, and so people left by the droves. That 65 went down to like 52%. That's a huge drop in the high water mark, right? And we lost a generation of then millennials out of the marketplace. They left. They were like literally thinking, if you did any kind of investor survey, that the mattress was better placed than the markets, right? And yet, I think that looking at what happened in the exponential growth of this market through the lens of COVID is the wrong analysis. What we actually have to see is what are the systemic things that made COVID the untapping of that, right? So software was birthed. Our phone was birthed, right? At the peak of before even COVID, but at the peak of COVID, 60+% of trading was happening on the mobile app. Think about that. On a device that wasn't even born, or at least barely born before the life cycle. And now what you see is participation rates, okay, they're not exponential the way they were during the COVID era, but they didn't give in. They didn't go 10 points down or 12 points down the way they did before. Now, it's always too early to write the rest of history, so I'm cautious and humble enough to know that, things could change. But I do think there's something about the network effect of social, the software access, the fractionalization that will continue, not just in stocks, but in other areas. The minis and micros in futures and, the 0 days and options that are still showing us deep participation. And so I think that that's what's so fascinating to me is to understand why this is durable, even though we're in a little bit of a bump. Why is anybody crazy enough in a 5+% interest world to be risk on? And yet they are. Not just retail, but institutional. And so I think the easy answer is, oh, it's dumb money, this social business, it's, that would be too cynical and I think a way much of a blind spot. Which is why I came to this other side.
Good, thank you for that.
Right, a different perspective on the community-based trading, right? What happened pre-COVID to COVID times. We had a trading platform. Many people were home and many traders got in and everything. So everything was about simplifying a good user experience. We started a product where easy 3-step guided process to options trading. You pick any particular strategy, you pick a company, you visualize things, and then boom, you trade. So that was the trend. It kind of started in the early COVID times, and slowly everybody started joining these communities. The influencers growth tremendously increased in the last 6 months. Sorry, COVID started and 6 months later on it increased. So what happened is all this community base, they wanted to increase their thing. They wanted to bring in their educational content and everything. That's when I think it was like an immersive educational content. At the same time, ability to trade kind of a platform started to come in, at least from my perspective as coming in new. Obviously, I'm talking just about like last 3-4 years in the sense. Those were the change and the trend we started where community-based trading started. They wanted to have like, if their traders wanted to pick any of the straddles, triangles, and then they want to visualize. Before they hit the place order button, they want to like review a few educational content. It could be a video by their influencers. Like I watch a 30 seconds video, like just want to be sure that iron condor for this Tesla is really good. Am I not missing out any particular variable before I place an order? At the same time, you want to like have a chat and then within the community, like ask that question and then place an order. So you can do all of these things within the community-based platform, within your group, within that influencer group. So that's the trend, at least from our technology perspective, we have seen that growth and a lot of many influencers, they do not leave their platform. They like something, they want to cherry pick things from different various tools and different traders, but they ask us like, can you use that API? Can we have that specific feature inbuilt in our particular platform, in our particular website? So my influencer is paying me whatever the $20 per month. I don't want him to go research anything outside. I will tell him that these are the 10 tools which needs to be used. It could be an option strat, trading view, whatever, right? And then we customize those things into that platform.
So my view of the trading industry is slightly different. As I said before, we started out as an options market-making firm, and we have always been very focused on professionals, active traders, sophisticated investors, as well as institutions. So in the beginning, these were former floor traders because those were the people with the experience, and as time went on, API programmers and those who want the most advanced AI tools. So what we look for is that cohort. We don't look for a certain age. In fact, our average age of our average trader is 42 years old, and that hasn't changed in 23 years. It seems that as you know, traders and investors get older, you know, they want to look for a platform that has the tools that we have to offer and what we focus on, and they join us. So we're not as into providing, you know, the social aspect of it. Certainly, we have lots of tools integrated into our platform with third parties that know a lot more about this than we do. But we are just trying to provide the basic utility plumbing for anybody around the world that wants to trade around the world, and that's really what we're best at.
Thank you. Lule, I want to say I really enjoyed what you said. It was true. In 2008, everybody ran for the door, right? But this time, we all feel the same. People started opening accounts. Everybody started trading more, and it looks like they stuck around. So it looks like it's a generational shift or industry shift, and people are here. On the user base, this is a question for everybody. Lule, please go first. We'll take turns. How do you find your users interact with your platform? How do you measure them? We know that his age group, 42 average. What do you use? What kind of tools or resources or in-house to really understand your users' needs?
Well, the first lesson I learned out of this is I have to make sure I'm not a feeder to Steve, so I have to go do my development work. So, in all seriousness, so we measure it in different ways. So because it's a social platform, what does that mean? When you open an account at eToro, you get a social handle. You don't really come to eToro to be private. You would go maybe to Steve's shop or other. You want to come to eToro because you're engaging. We have 32 million users globally. So you get a social handle, and that social handle really sort of carries along with you. Now, we have privacy mechanisms that you can be private, but it's like going to an Indian restaurant and wanting Chinese food. It doesn't make sense. But ultimately, you can be private if you want to. But once you have a handle, you partake in a social ecosystem to talk about investing. Now, that investing ecosystem, we monitor and we make sure that there is a sort of level of hygiene and transparency. In the US, you cannot engage in that social system unless you are public as a user handle, because we find that actually transparency is the key to making sure that quality is maintained and sort of good hygiene is maintained. So you get that social, and what that means is whether you trade, you research, you do anything, you can then post your thoughts around it. We make it easy for you to be able to post an idea, a thesis, a point of view, etc. So from our perspective, the hive mind is the point, not just a feature. It is actually like engaging. What we find is when we do survey after survey, investors that come to us, remember our demographic is majority millennial or younger. So it's majority of our demographic. About 70% of our demographic is either millennial or younger. They want to come, they survey after survey tell us that the order in which they trust is this, okay? Number one, technology, which is why they're DeFi people, right? So number one, technology they trust. Then they trust their community, meaning social or otherwise, peer-to-peer community. Then they trust institutions. Number three. So if you design a system that respects that, right? Because I actually don't think institutions, I'm not cynical about institutions. I'm old enough to know that institutions are important, right? It's more about knowing the order with which your user consumes investing news and information. And the order that they consume it is that they first think technology, then they think social or peer-to-peer, then they think the institution. So for instance, if I decided to use our technology to just come up with investment products, thank you very much, Lule, but no, just build me the highways that let me execute and be part of an ecosystem where I get ideas. And those ideas can come from Kuala Lumpur, or other places, right? Anybody who's on your platform that's sharing ideas. So it's just a very different mental framework. I grant you that the beauty of an interactive broker sort of platform is the complexity, the tools and the complexities and the access to markets that you're getting. I totally grant you that. But I think it's a matter of time until software starts decoding even that, making it simpler and simpler and simpler. And I think that's the key, is really figuring out how to take complex instruments, complex products, and adapting them for two things: simplicity, and then the second is smaller bite sizes, which is why I think fractionalization and minis and micros are so phenomenal. Because what retail investors have realized is that I can take more at-bats in smaller bites. That's an amazing lesson to learn in investing, right? More at-bats and smaller bats. And so I think those at-bats, so that's, I think, is like sort of that's why I still think it's a secular trend and not necessarily a moment in time.
Great, thank you. Abdul?
Right. From my perspective, right, it's community-based trading. What's happening, for an example, is like, again, we work with influencers like 1 million users, but he's focused on the Spanish traders across. He understands those Spanish trading thing. So he wants to build this customized products, community-based things, and then grow his particular community. So the product and the features is more towards immerse you, educate you, and those simplicity, because of the novice users, maintaining the simplicity and then maintaining that easy user experience. It's all about those community trading and building those based on the feedback, collective feedback coming in from within these traders out there.
So Lula, what you said was very interesting, and I think it could be a cultural thing.
I have a winner.
Well, here's the issue. Given that we started out in options market making, options traders tend to not share anything with anybody. They do things on their own. So it's probably in our heritage that we're not a sharing kind of place with all our clients, and our clients tend to be that way. But anyway, the types of people we look for, it doesn't matter where they reside, anywhere in the world. In fact, 80% of our accounts now come from outside the U.S., whereas when we first started up, it was all U.S. So, and the trend I see happening right now is there's more uncertainty in the world everywhere, that we are getting more and more clients that want to put their money into a broker that's in the U.S., even though we have subsidiaries all around the world, in every place you can think of. But they want the safety of that, and it doesn't matter where they're from, you know, in the Middle East or Asia or you know, any other geography, and that's kind of the trend we've been seeing, I would say, for the last 10 years.
Question. Middle East growth, is that like probably your number one growth area right now?
Excuse me?
Middle East accounts?
I
Is that like your number one like growth area right now? I mean, we've seen a lot. Like, I mean, that's why I was just
Oh yeah,
curious.
the Middle East is strong.
Yeah, right.
Asia's strong. You know, Europe is strong. I would say anytime there is volatility, whether it's political volatility
Right.
or financial volatility in any country, you
Yes.
see an uptick
Safe haven, yeah.
in accounts from that particular country.
Yeah, so, but to answer the question, the other fun fact I'll share with you, Stephen,
Okay,
is
good.
your users do like social, because about, I think 15% of our users have interactive broker accounts.
Which is excellent.
right,
And as
so,
I said, we look for partners like you.
they're just
'cause
not
it's
on your
our-
side, which is fine.
It's not our
20% we'll take it.
expertise. Right.
Is it really? Okay.
What's the other 85, Rishi?
What's that?
What's the other 85%? Like,
Last time we did it was Robinhood, TD Ameritrade were like kind of tied 1 and 2. Fidelity was surprisingly up there, like close 3, but I think that's like IRAs and like, you know, those types of accounts. And then it was essentially E-Trade and, you know, interactive brokers, and then there was like the long tail.
Yeah,
but,
you just don't have the right mindset. That's where we
yeah,
love
no, fair.
partners
No,
like you.
no, but going to like kind of the product side of it, right? So, you know, we are a social first, community first platform as well. And so I think, you know, we think about things in kind of 3 different buckets I'll share. Going right to the heart of conversation and community around conversation. So StockTwits, for those of you that are not familiar, very much, you know, is a verticalized Twitter is the simplest way to explain it. But the difference is we also organize conversations by what we call cash tags. We invented the cash tag back in 2009 or whatever. And that's essentially, you know, tickers of asset classes, or, you know, if they're not stocks, we, you know, tickerize them in other ways like crypto and stuff. But like, so within, you know, when you are following a company, let's say, you know, Microsoft has earnings and you're following it, you know, you go to the Microsoft stream and you see the conversation around that. One of the important things when you think about social and community is liquidity of conversation, right? Because if there isn't a very liquid and active conversation going on there, you know, are you really going to stick around? Now, there's thousands of tickers in the world, and not all of them are liquid, right? There's a ton of like long tail stocks that, but do they have enough fans, right? Do they have 100 fans or 500 fans that actually want to talk about that company and keep the conversation going? So, you know, that's one of the elements we look at. And so, you know, now when you think about social, you know, I break down social into 3 buckets. And, you know, I'm from the Web 1.0 days and the Web 2.0 days. And I do break it down into 3 buckets of creators, contributors, and consumers. And it really is this like roughly like 1-9-90 model where, you know, bulk of the content, the bulk of your super active participants that, you know, want to become, you know, known and followed and stuff, that's 1%, right? They're the ones that are seeding that liquid conversation. Then, you know, that 9% or so, like, they're the ones, hey, I'll respond, I'll reply, I'll like, I'll engage in some ways, I'll contribute to the community. But the reality is many of our users come to just consume and, you know, take it in and read, you know, the streams and the conversation going on, get access, hey, look at the data related to it, like if it's earnings or if it's, you know, some other event or whatnot. And so when we think about the product side, like liquidity of conversations, and then how do we get that engagement, you know, for the 1-9-90? How do we, you know, create creators, right? And how do we get them to want to participate? That's an important element as well, right? And so that's a way we think about retention. I keep looking over there because like product and community teams are right there. But, you know, how do we think about retention? And, you know, what are those activities that we expect a user to do if they're going to participate in the community or if they're going to just consume in the community, right? And so, hey, if you follow another user, you are much more likely to stick around, right? If you add things to your watch list and add stock tickers to your watch list, you are much more likely to stick around. And then, that gives us a lot of tools to like give you information and notifications. So, how that engagement happens, what's that first experience, that ultimately leads to why conversations are liquid and interesting. Those are the things we look at every day. And then finally, like, just from the interesting thing about markets is there's new content every day, right? It's like literally, there's new content every hour. And if you're in crypto land, then it's every 10 seconds there's like fascinating new content. And so for us, like, there is no shortage of the conversations to have and the game to play, so to say. And so, we look at things like as daily active users and, monthly active users, because those time frames are the appropriate ones. Because if you're in the markets and if you're a creator and you're active, if you're an active trader and, you're on Interactive Brokers, or even if you're a passive, like, I'm a pretty buy and hold guy. I've held my Microsoft stock for 25 years or whatever, right? So, but even then, I find it really interesting to learn and read. And so, how we get all those pieces, put together and work, I think that's part of the sauce of having a very organic social community, from our perspective, right? So.
Yeah, can I add to that? So I think you had asked
Only if
earlier,
it's
sort of,
positive.
all of it is positive, all of it. And it's at the margin, Rishi. So it occurs to me, you asked me sort of what do we measure, right? So one is about social engagement. The other is we also think about our funnel in terms of for most companies, the funnel is something, the end point is, did you fund, right? And we think actually seeing behavior in each interim funnel is also really interesting. So for instance, we have people who register, but who are just tracking other people, right? Who didn't necessarily go through our KYC, but are just part of the social ecosystem. Who have, in our discovery, they will track particular instruments, for instance, right? And be able to see the social feed around that. That is just as important to us. Widening that breadth is just as important to us, especially in an environment like this where people might be shy to go deeper, as it is to see how fast we can get down people to the funnel. It's not surprising that, in 90 days is the average to make a registrant into a user. Otherwise, they sort of get stuck in that funnel, sort of upper funnel sort of aspect of it. So some of the things I learned in traditional finance, they still work here. The difference, though, is that each level of the apartment is much more interesting to us than it was when I was in traditional finance. Because each level has its own ecosystem that has to be measured. Now, the other thing to remember also is that, how Rishi sort of split between the content creators, the content commentators, and then the content followers. We also see that that percentage breakdown, or it's not the same number of percentage breakdown, is also at the individual level. Meaning, I might be a creator 5% of the time. I might be a commentator 20% of the time, and then I might be a follower for the rest, right? So that's another element of it, right? It's like this idea of thinking that people are not multidimensional just blows out of the water when it comes to a social platform. And then the last thing I'd say is, practice is an underappreciated thing more than even education is. Education, you are a passive person sitting in and consuming something. Practice is a doing by learning. And so that's why we created a virtual platform that allows you to practice before you put in actual dollars. And that is also important to us to see how often do you practice? Do you practice? Do you engage? So there's several ways we look at the ecosystem of engagement that tells us, yes, the bottom line is we have to make money and we have to be profitable, but tells us the reach and the breadth of our platform.
Cool, thank you for that. That's good. You mentioned something, Stephen. You said that people around the world are possibly looking for a safe haven. They like opening accounts in the United States. I guess you all may be seeing that. That being said, new investors entering the market, demographics globally. How are these platforms, your platforms, adapting to that type of change? What are you doing? What kind of tools or resources? What kind of education? We learned a lot about the metrics across the board with all of you. But what kind of changes do you see coming? New ideas, global ideas, people feeling more comfortable on a platform. As Lule said, technology is extremely important. That's the number one. Abdul, can you share?
I'll probably let Steve go first, and then I'm going to give a different perspective on the technology. Yeah, go first.
Okay. So, You know, we've been translating into multiple languages for lots of years. And still, I would say English is by far the most popular language. And the reason that is for us is because, you know, in a more professional type of place, English tends to be the language of trading, just like for air controllers, air traffic controllers, I would guess. I'm not saying it is across the board, and certainly we continue to do these translations. But for our professional audience, we find that English generally, you know, works best. And if you think about it, if there are investors coming in that want to go into the U.S. and invest in the U.S. markets, because that is the biggest market for us, even though we offer 150 different markets around the world, if you really want to get into it and understand it and know it, you have to be able to read a lot of the prospectuses that are all in English, and maybe that has to do, you know, with why that happens for us. But I don't know. Certainly for other companies, it may not be the same as for us, but that's what we've seen.
Same thing, like you said, right? The communities, they've been like more like niche towards their own understanding. Could be non-English, could be like a European thing, or Indian market, or a Spanish community, right? Education, simplicity, especially for the novice and intermediate users. They want things to be as simplified, and they just want to follow their influencer. Is it okay? Yep. All right, thank you. You want to follow the influencer. So at the same time, they want to make mistakes like paper trading. At the same time, like customizing to what their chats it could be, right? Their own community, it could be a Spanish, their niche community, building that thing. So making that customization towards a specific country or the community is what things we have been seeing, and the features we have been asking to build. The trend could also differ in terms of the features which is coming in, where a little bit of like back testing is involved. We want to like give more niche ideas and probability metrics towards like how things are being traded in a different market, different communities, and different perspective towards different regions. So those are all the things we are seeing the trend, and those are all the things, products we have been like asked to build.
Yeah, so we have, I would say actually there's really an interesting sort of tale of two stories. So one is like wanting to access the exchange-traded nature, the transparent nature of the capital markets products that are afforded to people here in the US, and being able to access it for Globe. But we also see this, the second part of the tale, which is interesting, depending on where you are, but primarily, let's say Europe or UK, there is a home country bias even for those people when it comes to what they hold. So you will find and it's really interesting to see, at least lately when I see the data, it's also sector by sector. So what you find is that technology is agnostic. Everybody wants to own the American technology companies, period. So Tesla, NVIDIA, like et cetera, right? That it's an agnostic desire to be part of that. But then what you see home country bias around might be like healthcare. It could be their local sort of either their region, et cetera, they might be interested in, or financial services might be regionalized. So it's not a simple story of like US secure, the rest is not. It's a little bit more nuanced than that, but definitely, especially when it comes to sector specific, there is an instrument type of like exchange traded products like options, et cetera, a desire to access the American infrastructure.
Yeah, I think, you know, from our perspective, you know, we're not that good at international. I mean, like, you know, I think that's, you know, we're primarily US based. We've done a terrific job of launching and building our brand in India. And so, you know, we have partnerships. Our streams are integrated on like CNBC India and Economic Times and Business Insider India. But we have a lot of opportunity ahead of us to tackle international. I think, you know, and there's two ways that, you know, we think about tackling it. One is that foreign user based in a different country, but interested in U.S. markets. So we can support that, and we agree like English is like the default language, and language translation is very hard, especially on social. I'm sure there are partners we can find and whatever tackle it, but for us, the market is big enough just to start with tackling U.S., right? And when you look at the top 5 exchanges outside of China, it's essentially U.S., Canada, U.K., India's 5, and Australia I think is 4 or something like that, right? So. We think there's a lot of opportunity there, but how you build that local community, because the thing about other countries is while they might all be investing in U.S. stocks or have this diversified portfolio of, hey, I know these local brands like financial services and healthcare, but they're also all Apple users and want a Tesla or have video game things and NVIDIA's or whatnot. That familiarity, how do we help seed the community in those countries so they can have a shared conversation, because they might have a very different risk profile and a very different, consumption profile than a U.S. user, or an India user is going to be different than a Turkish user, is going to be different than an Australian user, so on and so forth. So how, we attack and seed it. I wish I could tell you we have a playbook for every single country and we know it. Like, we aspire to have, the 32 million international users and whatnot that eToro does or that, TradingView does. But we're not there yet. But we do know, community is still somewhat local, and there's cultural elements to it and all these other aspects. Even in a place like India where we've done a really good job, there are very different regions there, and how they approach investing and trading and finance and money is very different. And so how do you cultivate communities and kind of seed that for a platform that is social and community driven like ours is no easy feat. So we're working on it. We'll get there.
Thanks, Rajiv. All right, so the next question, you just touched on it. Ecosystem, your ecosystem. All of our needs are different, of course, but most businesses probably want to keep people on their platforms.
Yeah.
So from traditional features, your ecosystem, whether it be cultural, demographic, where they are in the world or what they need, how important is that to you from a product experience standpoint to keep these folks in your ecosystem? Don't let them leave your platform. And some of our businesses, we want them to leave our platform, right? I understand.
Yeah, so I think, going back again, because we are community driven first, one of the elements around that creator, contributor, consumer thing is, one of the things you got to think about to cultivate an ecosystem-led kind of platform is how do you cultivate stars, right? And I mean, the people that can, get big followers, right? So when you look at other social media platforms, whether it's the Facebooks, the Instagrams, the Twitter, X, whatever that debacle is, TikTok, whatever, those ecosystems cultivate stars, right? And hey, these, we have users with hundreds of thousands of followers and stuff, and those be one dude. Probably analogous on copy trading, on eToro's platform, right? There are stars, oh, that's the one that's getting all the love and flow. And so building an ecosystem, you do have to be mindful of that community to give them, kind of the, fulfill their ego and why they're there. Even though they're sharing knowledge and information about markets and stocks or trading techniques or whatever it is, they're still looking for that kind of gratification, I guess, or whatever. And so cultivating an ecosystem from that lens is an important aspect. And then how do you create the virtuous cycles between conversation and data and tools, right? It's not a super feature driven. Ultimately it does come down to, hey, okay, we're building features and product tools and whatnot, but the glue that has to keep it together is bigger than any one feature, right? And it has to be beyond just, okay, hey, we added, an options data feed now, and so that's going to solve all problems for all options traders out there. No, that's not the case at all, right? And so, and I think especially the other challenge in our space, most of the world in our data and brokerages and stuff are all commoditized to a degree, right? At the end of the day, I don't get to make up the market cap of Microsoft or the stock price of Microsoft. It'd be really fun if I did, but I don't, right? We all get the data from, relatively the same places and whatnot. And so, how you think about putting the pieces together, and in our case, how does the community at the core of that, and how are you enabling that? I think that's the difference, for us from an ecosystem perspective versus straight just, okay, let's add this new thing and new thing and new thing. But Yeah.
Yeah, so I think from an ecosystem perspective, what's interesting is, so we have what's called popular investors, right? So these are individuals who get a lot of either people following them or copying them. And one of the things that's really important about the formation of ecosystem is institutions have the temptation to engineer that. And the reality is you've got to let the ecosystem itself create followership, and then what you do is create force multipliers by making sure that those individuals who get a certain level of copies pass muster, if you will. So we have requirements around, like, once you become a popular investor, what kind of behavior you have to have. But it is not us saying, okay, we anoint you now, right? The system has to sort of, the ecosystem itself has to create the followership and the desire. So I think that's a really important sort of respecting the system, the ecosystem side of it. The other thing that I feel like is like what crypto taught us is the power of culture in investing, right? I think, I myself in my own lifetime, I remember when I used to go to Thanksgiving dinners, my relative would say, what do you do exactly? And then I would explain from like ground zero what I do. And now I go to Thanksgiving and it's like, so which stocks? Which coins? Which this, right? So culture has been penetrated in a way that by investing that I think in itself feeds the ecosystem, right? And so the ecosystem now is like, one of my, the folks who works with me was telling me he went to visit his grandpa, because they all went to visit them and to say farewell for the grandpa, et cetera. And the grandpa wanted to talk stocks. Right? He's going to the other side, but he's talking stocks. And so I think there's something, I actually think it's marvelous, right? That the world, and what's really interesting in this ecosystem of America is, as I said, it's like 65% of households, right? Guess what it is in Europe? It's like at the level that it was during the Great Depression. It's like 18%, 15%. And yet the desire to take, back to my point of small bites of risk, is a growing trend, right? So I think what's going to happen is this sort of eco-cycle of culture, wisdom of the crowd, as that becomes more and more globalized, I think what you're going to find is that the guy sitting in Kathmandu has a lot more in common with the guy sitting in some part of Brooklyn than maybe even the guy sits in Manhattan, right? So the world becomes more networked in a way because of that ecosystem.
So the TikTok, for example, right? What made it popular was the attention span. When we come with novice and intermediate users, they want to learn trading. They want to learn, especially options trading. It can get as complicated as possible. If we are to maintain the community within, use our systems or use our particular platform, they want to learn at the same time trade. Simplicity, user experience. At the same time, those educative content can go as long as 1 hour of educative content, giving them and providing the data before they place an order, or they want to just brush up any particular thing, just like a TikTok, like very simple. It's a summary of what it is done. If you want to do like a straddle or like a long call butterfly, you just want to like brush, like, okay, am I doing it right? What is my maximum profit? What is my maximum loss? Giving that details and the product within that particular page so the user doesn't have to like navigate outside that particular system. So keeping them intact and building these nice, simple, easy to use, easy to understand user experiences is probably the thing.
So I won't be going to Thanksgiving and giving out any advice, because if I do, my family would probably lose all their money and not talk to me anymore.
I didn't say I gave advice.
Anyway, early on, when we established our broker, we built this open source API that any company or individual can program to. And we created this investors marketplace, and we have thousands of listings there of various different tools and charting tools and social tools and everything else. We certainly don't want to tell our clients, how to trade, whether it be social or technical or fundamental. It's their choice to choose that. We are just providing the utility. We have a website called ibkrcampus.com. It includes all our educational offerings, and in the last month, we added a pillar to it that includes all our API documentation. So anybody that wants to integrate with our platform can go to the IBKR campus and read up on the documentation and integrate their platform into ours. And that's pretty much been our strategy.
Great. Okay, roadmap, the future. So recent market changes, interest rates went up. We talked about demographics. We talked about the global needs. People around the world, they feel different. They may feel the same. Crypto, how has this impacted your roadmap, whether it be 1, 3, or 5 years out? What changes are you making? Are you adding new asset classes, whether it be crypto or fixed income? Start with Abdul.
I don't think I'll have a perspective about that, but given the technology, so I'll probably defer it to Stu, Lule,
Okay.
or Rishi there. Thank you.
Lule?
So I think one of the best things that happened to our industry is commission going to zero for a retail investor to reach. One of the worst things that happens to our industry is commissions going to zero, because not because of the fact that we weep over the revenue lost, but because revenue feeds, money feeds new features and new products and new roadmaps, right? So I think our industry is at a crossroads to figure out what that is post the zero commission world. So a few ways that we're thinking about it. One is like following where the need around fixed income or interests are, because we do think that that's going to endure for a little bit more time. So features and products that do that. The second, as you know, is, I'm sure all of you know, but since COVID, options, futures, innovations around that have actually grown even more. So getting into spaces where the appetite for small bites of more speculative stuff is happening is another area. And then, of course, from a global product perspective, a lot of interesting, you can imagine the kind of data we have, how AI and the power that has, generative AI has, and being able to create innovations is pretty phenomenal. So lots of stuff we're doing globally, not yet quite in America, but globally, to innovate using AI instrumentation. And I will leave you with this. So one was like the commission going to zero, and then having interest rates, money becoming expensive, as I call it, is the phenomenon. But the other part of it is I think making sure that our regulatory and policy-making mindset is bending towards capital formation, right? I think for good or bad, I don't think that's what it's doing right now. And so I think that will also help in terms of making sure that roadmaps and retail engagement keeps reaching for that very important thing, which is that all people should have access to investing, not just rich people.
Thank you, Lule. Rishi, on your roadmap, and probably just have a couple minutes.
Yeah, so at a high level, we think a lot about the access to data, right? There's a ton of data out there, and how do we bring the community lens of data to the forefront? And so, without sharing anything, I think that's one of the things we're thinking about a lot, and bringing that into 2024 as a part of our roadmap. Of we have our sentiment data, we have our trending data and most actives, and things that help give people signal to ideation and research around the names that they might be either trading or investing in. But I think the other angle there is also, how do we think about making data usable and consumable, right? Because there's plenty of data in the world, but how do we make it accessible and usable by our community and the users? And this is, I think, part of the role that generative AI will play, and the rise of the language models, and being able to translate data into things that beginning investors, mid-level investors to experienced investors can synthesize all this, fire hose of information and data coming at them. So, we're not super active in that place right now. We're letting a little bit of a watch and see, and there's a ton of, startups in that space right now, and I think there will be a very quick consolidation over the, coming years in that space, as well as potentially the brokerage space and whatnot. But, so I think, data and that consumption of data, and how do you make it not just accessible, but actually usable, right? And deliver value to our community and the users across that spectrum. So that's, a big area we think about a bunch.
So, Stephen, the last word here. Do you have anything on your roadmap? We're right at time here.
Yep, well, I'll be real quick. So introducing new markets around the world has always been what we've been about. We introduced Taiwan and a few Eastern European countries. The one product I would say is very interesting are bonds. We introduced our bond marketplace about 5 years ago, which we believe to be the largest electronic bond offering out there. When we introduced it, interest rates were extremely low, and we didn't have a lot of takers at the time because nobody wanted bonds then. And we've seen a huge uptick in bonds in the last year because of the interest rates. So that's certainly an asset class that's coming into interest all around the world.
All right, great. So that concludes our panel. I wanted to thank Benzinga and also the panelists. It was an enjoyable conversation. Thanks.
Thank you.
Thank you.
Barry.